Okay, let's unpack this. We've been doing a deep dive into the latest Q3 2025 insights from Coutts, looking at London's high-end property market. And really, our mission here is to give you the shortcut, the inside track on one key thing: buyers right now. They seem to hold a really clear advantage. The data suggests this prime market is, well, it's softening. Prices are dropping, and discounts are getting deeper.
Yeah, we should probably jump straight to the numbers. They really tell the story here. Prime London property prices, they dropped 6.6% just in the third quarter of 2025. And crucially, if you compare that to the market's last high point, prices are sitting about 10.5% below that peak now. And this isn't just, one or two spots. It's pretty widespread, down 2.3% compared to the same time last year.
Okay, wow. That 6.6% quarter-on-quarter drop really paints a picture. But were there any areas that completely bucked that trend? Any districts immune?
Well, yes. There always seem to be a few pockets. We actually saw Hammersmith and Fulham rise by 4%, and Hampstead and Highgate were up too, about 1.3%. But honestly, those two are definite outliers here. The overall trend is definitely down.
That geographical split is interesting. But let's maybe zero in on the transactions themselves, because this is where that buyer leverage seems, well, undeniable. Coutts is reporting that 79%, nearly 4 out of 5 sales completed below the asking price last quarter. And maybe even more telling, 41.4% of deals were for properties where the price had already been cut at least once. Both those numbers are up from Q2.
Right, and that's a classic signal, isn't it? High supply meeting cautious demand. It's not just sellers being more willing to negotiate. It's also that the market inventory, the number of properties actually for sale, has gone up significantly. We're seeing about 14% more properties listed than a year ago, which naturally strengthens the buyer's hand.
Makes sense. And if we look at the very top end, the super prime stuff, sales over £10 million, transaction volume there was down 22% compared to the 10-year average. So not only are prices softer, but it seems like the wealthiest buyers are maybe holding back a bit too.
Exactly. And this whole situation means location is just absolutely pivotal right now if you're looking for a deal. You're finding the biggest discounts in those core central London districts. Think Mayfair. St. James's average discounts there are getting close to 20%. And other prime central spots like South Kensington, Knightsbridge, Belgravia, they're trading, around 22 to 24% below their peak levels still.
20% discount, that sounds huge.
Yeah.
But I guess the question is, were some of these places maybe a bit overpriced to start with? Is it just a correction? Regardless, that kind of deep discount isn't happening everywhere in London, is it?
No, absolutely not. It's very localized stress. If you move out to the, let's call them outer prime neighborhoods, places like Wimbledon, Richmond, the market there is still much more competitive. Price cuts are much shallower, maybe closer to 3 or 4% on average. So that really tells you where buyers still need to compete versus where they, well, hold most of the cards.
Okay, so we have cheap discounts in some areas. Buyers have leverage. What's causing the overall slowdown then? Transaction volumes fell 12.5% year on year. Keats mentioned uncertainty around the autumn statement being a factor. Do we think buyers are just pausing, waiting to see what happens? Or are they holding out for even bigger price drops?
It feels very much like a wait-and-see moment, fueled by that uncertainty. Catherine O'Shea from Coutts actually highlighted that the next few months are pretty crucial. They'll show whether the market finds its footing or continues to ease off into 2026. The general feeling seems to be that getting expert advice right now, whether you're buying or selling, is really key for navigating this. Pricing strategy, negotiation, it's all critical.
Right. So what does this all mean for you, the listener? Prime London looks firmly like a buyer's market right now. Supply is up. Sellers seem willing to offer pretty steep discounts. But crucially, it really depends where you're looking. You need to know the specific neighborhood dynamics to find those biggest potential savings. Okay, so here's something to chew on. We've got a 14% increase in properties for sale, right? And at the same time, super prime sales volume is down 22% against the long-term average. If that general economic uncertainty sticks around into next year, what does that combination more stock, fewer top-end buyers imply for what sellers might have to accept? Something to think about.